Welcome back, everyone. This is May 12th of 2020, and our weekly market overview is about to start. So thank you, everyone, for joining us, and we'll dive right in. So as always, my name is Michael LeBlanc, Director and Senior Portfolio Manager at Canaccord Genuity Wealth Management. And we're happy to bring you these weekly updates of everything that's going on in the market, what we're seeing, what we're expecting. And also we try to tack on some strategies and our outlooks on how we might come out of this from a financial perspective. And today we're going to talk about some things you can be doing outside the portfolio, taking advantage of the opportunities that we're seeing presented to us here today. As always, this video is for information purposes only. Do not take it as advice. Always talk to a professional advisor or do your own due diligence before acting on any of the information contained. And we try to keep the information as updated as possible, but of course, situations are always changing and you should verify the information before applying it to your personal situation. So before we get going, we are using Zoom. Remember, your mics and cameras are muted. If you'd like to ask a question, by all means, we welcome them. At the bottom of your screen there, if you move your cursor around, you should see this little Q&A box, and that allows you to type in a question, which we'll get to at the end. And also, my little picture there you see in your corner, if you're having trouble reading the text, I'll try to collapse it if there's a lot of text on the screen, but you can click that little button and collapse it as well if you don't want to see me and you want to see what's on the screen behind it. By all means, I won't take offense, I promise. So let's start talking about where we're at with things going on with the virus, with the economies, and everything else we're seeing out there. Well, right now, we're seeing a lot of dissatisfaction with the government, especially in the U.S. We're seeing the job losses to extreme levels, levels we have not seen in decades down in the U.S. and around the world, particularly focused on the U.S. Unsatisfaction with how the government's handling things, both from the stimulus packages. We're seeing a lot of people, not able to get to the stimulus packages because the unemployment office or the benefit offices are overwhelmed, or the technology just wasn't there to handle the volumes. That continues. And of course, we're seeing more and more protests in different areas that want to reopen. And despite that, there is a lot of opening already happening. This morning, there was a big protest in Florida, which is one state that has mostly reopened, that the gyms haven't opened, so they're pushing for that. So that news is just continues on in the U.S. And then, on the other side of things, where people who are concerned that the virus hasn't been contained, dissatisfaction with the government of how they've handled things to date, and how they might be pushing the reopening too quickly. So a lot of dissatisfaction with the government in the U.S. in particular. The U.S. is also looking at part of their containment strategy is for people who do test positive is to use some of the home arrest technology to track and make sure that they stay at home, that they're not out infecting others, which is interesting. That's a newer development that they're looking at. So we'll keep an eye on that, as that might lead to more dissatisfaction. And, another thing that's come up, you've probably followed the news. We're seeing a lot of the meat processing plants being closed down, everything from pork to beef. And just like we saw with potatoes, we've seen it with dairy, we've seen it with oil. With the lack of demand or lack of ability to process this, we're seeing a glut, and now we're seeing it with cattle. We've got the ranchers with excess, not able to get them processed, and then of course a lot of concerns around potential shortages at the retailers as the beef isn't getting there. There has been some push by the government to force the plants to reopen, but there's been a lot of protests by the workers that it's not safe to go back. So that struggle will continue. As far as the numbers go, we are approaching 300,000 deaths total worldwide. The US is through 82,000 as of this morning, with almost 1.4 million total cases. Canada continues to do well. Quite a bit of problems back east, Quebec particularly. Seems to be focused in the Montreal area. Ontario seems to be, they've had a few surges, but they seem to be handling it quite well. BC is probably the best of the major provinces with their track record. However, I don't know if many of you saw the photos from last weekend at Kitts Beach and other parks, where it seemed a lot of people went out in full force to enjoy that beautiful weather. It was nice to talk to colleagues last week in Ontario where they were getting snow and it was 25 degrees in my backyard. So at least we're enjoying some beautiful weather out our way. But we keep track of these numbers simply to keep an eye on how it's going to affect the economy and, of course, whether we'll go into a second wave. That will definitely impact the second quarter even further as the economy slowly reopen. We also paying attention globally. Of course, Germany seeing a bit of resurgence after they started to reopen, which is a concern. There's a country that has been active with testing, has been active, with their shutdown, and as they slowly started to reopen with a very thought out plan, they're still seeing a bit of resurgence or a bit of a second wave. It's not got to the point yet that they're shutting down again, but we're going to keep a very close eye on that as we move through the coming weeks. So where are we today? The markets overall, in the US and Canada, we saw slightly higher last week, although a bit of volatility of ups and downs. And when I say slightly higher, very moderately higher, not any big rallies last week. We still continue to see NASDAQ or the tech being the strongest performance. As we mentioned in previous weeks, we are in the middle of earnings season. Earnings seasons where all the companies have reported their earnings for the first quarter. And keep in mind, any of those numbers that you might hear is for January through March. So COVID has really only impacted the March revenue. So we are seeing a couple of those months were unimpacted. So it's not a true indication of where companies are or how they've been totally affected. But what it is giving us a little bit of insight into which companies have been the most affected through this. So keep that in mind. We did do separate videos if you want to go watch those on the top 10 winners and losers since the beginning of May, so since earnings season. And you can definitely see the trends there, that technology and gold was a big winner for gold companies, or big winner, some of the bigger winners anyway, over since the beginning of May. And that's really telling you that people are still concerned. That's a flight to safety. That's a defensive position to buy into gold. That's not a bullish position. So when we see in the top 10, we see gold dominating a lot of those spots, that's telling us that people are still concerned out there. In the US, we are expecting the Labor Department's inflation data coming through. Of course, the expectations to see it drop. We've seen the consumer price index dip. So we should see that in the coming weeks. Fauci's going to speak in front of the or he's been asked to testify in front of the Senate on the health and education and labor as they try to put in a plan to reopen the schools. We're also seeing the top bank regulators looking at some oversight, and that's just the committee's looking for the banks to support the stimulus packages, to keep lending, to keep liquidity in there with companies who may have some debt coming due or need to tap into credit lines to get through the shutdown. So no big surprises coming up there. All is expected to go smoothly. We have seen continued problems in the oil sector. Chesapeake is considering filing for bankruptcy. As we've talked about in our other video on oil, we're going to see a lot more of this. Even though we've seen oil rally again, and keep in mind we've rallied to kind of the mid $20 a barrel. that is still way too low for North American manufacturers to profitably put out a barrel of oil. And the storage facility issue has not been totally solved. We have seen cutbacks on production to ease a little bit of the pressure, but until demand really ramps up, and yes, we might see a little bit more demand as we reopen from auto usage, but the real demand is in industrial and travel. So until we see that, it's going to continue to be a problem for the oil manufacturers. We're seeing some consolidation with KKR snapping up Cody's. Cody's is a nail and hair care business in the US. KKR is looking to buy them up. So we'll see a lot more of this, of some struggling companies being taken out by some slightly healthier ones as we move through. And that's a healthy consolidation. And it will keep the jobs and businesses running. So again, a positive note. Tesla is taking some action. They've called their employees to come back to work and open their plants ahead of official okay from California. There was a deal in place for them to reopen on May 18th. Elon Musk wasn't happy with that and opened 10 days early. So there may be some fallout there. It is in court. Tesla has taken the state to court over not allowing them to reopen and threatening to move the plant. So there's a lot of controversy back and forth there. To move the plant would be very costly for Tesla. However, in the long run, on the tax savings, as California is a heavily corporate tax state, he could move it to other ones, Texas being in the forefront, where he would have zero tax. So in the long run, it could save them a lot of money to move the plant. So a little bit of push and shove there between Musk and the state to decide the future of Tesla's locations. Marriott's profits missed, and of course the revenues plunged. Not a surprise there, as they're closed for the most part. We'll probably see that a lot in the leisure and travel sectors as the shutdown continues. Twitter launches labels, and we've seen this actually from a lot of social media platforms. So a lot of effort going into identify misleading information around COVID-19. So we've seen Facebook do different things, Twitter's doing it, and many of the others either putting labels and completely blocking content that is misleading information or even mentions COVID-19, just to try to keep the official reporting coming from reliable sources. In Canada, lenders continue to support companies, and the government is stepping in, just like we're seeing in the US, to be the lender of last resort for troubled industries, whether it be airlines or oil, which are the biggest impacted in Canada so far, but a lot of the other industries, the government is securing lending to make sure that they stay afloat, due to any debt needing to be serviced or refinanced during this period. And that was a big miss in 08-09 when we saw the problems with the financials. A lot of companies were not able to refinance. So it's a good thing that the government's stepping in and shoring up that ability, and they're doing it very quickly. It did happen in 08-09, but it took almost 9 months before that kind of kicked in. So it's coming in a lot earlier, and we'll see a lot of companies, a lot more companies anyway, be able to get through the struggle of this period. Again, on the gold sector, well, it says bullion surge. Bullion has gone up. I wouldn't say a surge, and we're seeing some consolidation there as some gold companies have a little bit more cash to go shopping, and they're seeing ability. So we're seeing SSR to buy Alistair for a $2.5 billion deal. So overall, fairly positive in the news on the economic front. As I mentioned, the earnings have been pretty split from some sectors that are seeing reasonable numbers and a lot of sectors that are being hurt during this. In our top 10 videos, retailers, of course, being closed are being much more impacted than those who have online sales. So we'll keep watching those, and we'll keep bringing you news from that front. So let's look at what we should be doing right now and things to consider, different strategies you can be doing either through your advisors or with us or on your own. But one is tax loss selling. You know, we don't often think about this until year end. But as we see this volatility, if you have some positions that have taken a bigger hit, you can sell those for a loss, and that loss can be carried forward against other gains. So it's something definitely to look at your positions and decide whether it's worthwhile. The other strategy you can use is, so the rule for tax loss selling is if you sell something lower than you purchased for, of course, that's a loss, and you can use that against your taxes. You can take it back 3 years. So if you want to refile previous year's taxes, if you had some really big gains, or you can carry them forward for future years. And they do carry forward, even if you don't use them in 2020, you can use them. There's no limit to how far you can carry it forward if you should need them. But to actually crystallize that loss, you have to sell it for 30 days. So if you sell a company or an investment and you take a loss on it, you can't buy it back right away. You have to wait 30 days from the day of sale. Then you can buy it back again. And you know, if it goes up from there, then you get the gain down the road. So you have to be out for those 30 days. And a lot of people, especially during this volatility, don't want to be out during that period. But you can go buy a proxy. So, you know, for example, an ETF, if you owned an ETF, you can sell one and you can go buy maybe very similar, if not exactly the same, but produced by a different ETF provider. So if you sold say an iShare ETF, you could go buy a Vanguard ETF on the same day, but that crystallizes the loss. You can also do that with positions. If you have an individual position, let's say you own Royal Bank and you wanted to sell that, you could go buy, say, TD or Bank of Montreal, which, you know, being in the same sector in the same country would be a close proxy. Or you could even go buy the ETF that owns Royal and some of the other top 5 banks. And again, it would be a close proxy, but you would crystallize that loss. So it's really worthwhile taking a look at your portfolios. We've been working with several clients where we've seen some areas we've been able to do this and take advantage of that. So something to consider as not a negative in the portfolio, but definitely a tax win if you can take advantage of it. Reposition taxable assets. So under that same concept, you can move some of your assets from one type of account to another. So, you know, a good example of that, if you have a cash account or non-registered account or taxable account, and you have some of your positions, maybe you really like those positions, you don't want to get rid of them. You might not be in a big loss position, but certainly a smaller gain than you were a few months ago. You can then move that over, say, to a TFSA, contribute it to a TFSA or contribute it to an RSP, and when they come back up or when they do go into gains positions, those gains would be more favorably taxed or not taxed at all within the shelter. So really looking at the portfolio and seeing where you are holding different types of taxable assets and how you might be able to position those better for the future. And likewise, if you have some assets that have some really big gains inside those taxable accounts, you could sell and buy them outside the shelter into that taxable account, where, you know, you might receive dividends on an ongoing basis, which are much more preferential in a taxable account than some other assets. So do keep in mind your different sources. Canada, we have many. Of course, we have the tax-free savings accounts or TFSAs. RIFs and RESPs. You have your locked-in RSPs if you've had a pension previously, and then educational savings plans or RESPs are all the tax shelters you can take advantage of and shift some assets around as might better suit you going forward. So save cash. Cash, you've heard me say before, cash is king right now. When we do see these dips, they are buying opportunities. These are great times to get in at lower prices. You know, one of the reasons our portfolios were so high in cash is because we saw things in the market being way too expensive. So having that cash is allowing us to go out there shopping for good deals, for good companies, for good income earners. But if you have cash on the side at home, let us know. We can move it into the accounts. If you have a cash that it's not invested right now and you'd like to invest it, let us know. We can put a strategy into place. We'll look at the time horizons on that cash. But it is a time to definitely take a look and see where you can take advantage of these dips, and over the next few years really see some stronger returns than maybe we would have expected without this pullback in the portfolio. So it's really worthwhile taking a look at your cash positions and deciding. Now that doesn't mean put all your cash in. Again, we should always have a little bit of reserve. We should have access to emergency funds, but sometimes those build up bigger than we expect over time, and maybe you have some excess funds that aren't working this down. People aren't spending as much, right? We're not traveling, we're not driving, we're not putting gas in the car or eating out at restaurants as much. So there may be some cash flow build up. So take a look at your cash reserves. Sell the dogs in your portfolios. So we've talked about this before. Just because things are down does not mean to hold on to unwanted positions. Really take a look whether those are positions you want to be holding, and also do you want to be holding them right now. It doesn't mean that the company itself is bad. It doesn't mean that it's not going to recover in time, but really look at what the outlook is for the next 12 to 24 months. Even if it is going to improve, and maybe it's come up in the rally here. We've talked a little bit about the REITs, the real estate trusts. More and more the news comes out. The rent collection rates are dropping dramatically. Even healthy companies have just, said no. There's here in BC, one of the biggest chains, has basically just gone to the landlords and said, hey, we're not going to pay. And we've seen that with some national grocery lines, just gone to the landlords or to the REIT companies that own the properties, and they've just said they're not going to pay because the landlords really are strapped. They can't, they can, try to kick them out or try to evict them in time. Of course, you can't do it right now, but in time they can look at removing them. But those anchor names, those anchor tenants, or even the size of real estate they've taken, who are they going to replace them with? It would be very, very difficult to find someone who takes those anchor spots or those large spots. So it's kind of leaving the REITs holding the bag a bit when it comes to cash flow. So when you look at an industry like that, should you hold them? For sure, the properties are probably good, well worth investing in, but you might be sitting on those for 2, 3, 4 years as you're waiting for them to recover. And they might even go up. They might go up by 5%. They might go up by 10%. But would that money be served better somewhere else where you could see higher growth in a shorter period of time? You can always go back to them in a year's time or 6 months' time after you've been in a better position that's bounced back sooner. So do look at the portfolio. Really make sure you're choosing the and the industry. Short-term needs, but when we talk your debts, we're seeing historic lows when it comes to borrowing levels or borrowing costs. Take a look at any debt, any mortgages, anything long-term. Is it worthwhile going in to renegotiate or extending? There's a lot of potential ability to take advantage of this, both from the cost of borrowing, but also from how you might position that. Business owners, I'm going to do a special one just for business owners because there's a lot of things you can do. Estate freezes right now while the valuations are low. a lot of strategies to consider right now. But try to knock out that debt faster by going in there and taking a good hard look at what you're paying and whether there's something cheaper or better for you out there right now. Review your estate plan. So estate plans, we tend to do when we park them aside. They should be looked at on a regular basis. I will always say, go and read your wills every, 3 to 5 years. It doesn't mean you have to make any big changes, but it is worthwhile seeing how up to date they are. Wills, when they get past 5 years, 10 years, really are worthwhile doing an update on them. Things have changed. Your estate might have changed. Your beneficiary situations might have changed. But it's worthwhile right now. You're at home, pull out the will, take a look at it. Look at who your executors are. Executor is an important role, and sometimes we overlook, who we're giving it to. We just might react to, a friend or someone in the family. But do keep in mind, it is a responsibility. You want to make sure, A, they're up for the task. B, they've got the time or energy or, health to do those, to do all the running around that they have to do. And then also, always recommend that they're in province. Out of province executors can have challenges, not just with location, but with potential bond requirements. And if they're out of country, even more challenges. So keep that in mind. If you have assets outside of the country, that requires a little bit extra attention, especially if it's in the US. It's really worth consulting with a lawyer who does wills and specializes in cross-border assets. You might need 2 wills in that situation. You might not, but definitely review what your will is. Make sure all your assets are up to date in there, and your executor and beneficiary information is up to date. Power of attorneys, of course, we always recommend those. Power of attorneys are the documents that allow people to act on your behalf while you're still alive, but you might not be able to. Very important also who you assign to be the power of attorney. And then, of course, attached to a power of attorney, here in BC, we have something called the Repositioning Agreement, and that's the living will. So that's the power of attorney deals with finances and assets. Representation agreement deals with health decisions. So, who can pull a plug? You want to make sure you give someone very, very reliable that power. You don't want them to be a little too quick with it, but consider that at the same time. It's not required, but a lot of people like to have it. And if you're doing it at the same time, it's easy. Also look at insurance policy. If you have old policies, can they be modified to better suit your current needs? Do you need them still, or do you need new ones? You might have some big tax liabilities in your state. Some state equalizations to deal with. If you're a business owner or a trust in the family, how are those being dealt with? There's a lot of tax benefits to having an insurance policy. It's not all just about paying someone off when you die. The insurance strategies, you can really increase the value on an after-tax base. So, it almost wipes out the cost of the insurance based on the tax savings. It might be beneficial. So something to really consider, because with this, we're very likely to see insurance premiums rise in the near future. So take a look at that. And also critical illness. So critical illness is actually insurance that pays out to you while you're alive. As soon as you're diagnosed, the idea is it gives you money or income now to get better, or take the time off or rest to recover, give you the best chance of recovery. So that's when, again, we're very, very likely, and we're already seeing signs of increase in these costs due to the pandemic. Numbers adjust in what they call your actuary tables that insurers use to build their cost structure. So something to keep in mind. All these things are part of your estate plan. If you'd like to review yours with us, we're happy to do it. We have specialists on staff who can walk through all of this as one big picture and make sure that you're up to date. Engage the uninvested. I've had a lot of calls over the last few weeks of clients who want to get their kids starting to invest, and some younger people who had not been invested in the markets or in any sort of strategy because of, just again the pricing or the timing wasn't right with what was going on in their lives. And they're starting to really get engaged. They're looking at this as an opportunity for probably not the last one for their generation, but certainly one of the first ones for their generations that they're at a point of time where they may have some extra income, they may have some extra savings, and they want to start looking at an investment plan. So talk to the family, especially the younger ones, if they haven't started, or if they have started, but they really want to engage in a real investment strategy, not just investment in the market. As we've talked about, it's very different than investment strategies in our investment plan, and it's worthwhile to engage them at this point in time, because it's a good, as we look at all these different strategies, and of course our previous week's talks about what to look for in the portfolios, it's a good time for them to build a solid investment plan and start to work towards one. So do engage and take advantage of the timing. And as always, we like to talk about where you can help. If you're one of the more fortunate ones that has been less impacted by all this, and you can help. We've talked about the food banks, of course, needing help. I do recommend you look at your local community food banks. There's some larger ones. We've talked about the Vancouver Food Bank, the BC, that help support the smaller ones. And any way you can help, of course, is great. Shelters and neighborhood family organizations who will reach out to your neighbors, or family services, where people, everything from support for single parents who might still be at work or might be getting sick, or even just people in needs who are out of their jobs. And they're trying to make ends meet. So try to help. And then, of course, the local businesses we highlighted last week, they're trying to do their best. The restaurants are offering the takeout services. A lot of them are selling pre-made meal kits, and we've actually started taking advantage of these ones. We did some for Mother's Day because I can't cook as well as my wife would like for those things. So you can go to the restaurants and get the kits with instructions, take it home and cook it fresh. They're fantastic, and it really helps the local businesses keep revenue coming in, keeps their inventory moving, all very positive. So do try to help wherever you can. This is something you can do, from home, if you're able to, and even reach out to help. I know a lot of you have been helping neighbors and friends who might not be able to get out, or there might be higher risk to get out, and helping them with groceries. And of course, stay safe out there. As we do slowly start to reopen, it's important to keep in mind that social distance is still important. We've gone through all this efforts to stem the curve, to try to protect the people that are more at risk. And as we slowly start to reopen, of course, it's going to be even more important for us to be very, very leery of our exposures, not only to ourselves when we go out, but then to others when we come back. So, take those extra steps, wear the mask, use hand sanitizer or wash regularly, and just try to keep that distance. I know the sunny weather is going to make it a lot harder, especially with a long weekend coming up. But do try the best you can. So that's all I have for this week. Next week we'll be back to normal with Tuesday, Monday being a holiday, but of course we'll be there Tuesday with the updates. If you have any ideas, by all means send them in, of things you'd like to hear about. If you have any questions, by all means send them in. We're always happy to follow up and get you information or assist you in any way. If you've liked this, please forward it on to friends. It is available for replay. We'll send you that link if you want to forward on to anyone else. And as always, we'll see you next week. And thank you, everyone. Take care. Bye now.